Yes. So now till now we have discussed 8 problems on valuation of goodwill. So now let us see the ninth one. I hope you all remember the formulas regarding the valuation of goodwill. So there are basically 3 methods. One is average profit, second one is super profit, and third one is capitalization method. And till now we have discussed about average profit and super profit method. So see this problem number 9. The following balance sheet of Jute Limited as on 31st March 2015. So let us see the asset side one by one. Asset side, there is goodwill information that is not to be taken while calculating net asset method. That is, while calculating capital employed, we should ignore this information. Why? Because we are calculating valuation of goodwill. Yes, land and building, it appears under the agreed value of asset. Plant and machinery, again it is there. Then motor vehicle, again it comes. See this. Now what is different in this problem? Different thing in this problem is about investment. If you see the investment in the previous problem, they have not mentioned anything. Then we have taken investment as non-business asset. But in this problem, see the purpose of investment that is given in the bracket. What is that? For the replacement of plant and machinery. So this is internal in nature. Now investment made for internal purpose. So it is related to the business activities of the concern or the organization. So in this case, investment becomes a trading asset. In all other cases, investment becomes non-trading asset, but in this case, investment becomes trading asset. So whenever investment becomes trading asset, what you need to do? So first thing you need to consider this while calculating net asset, agreed value of asset. Yes. Hear me? Can you hear me now? Can you hear me now? Can you just tell me, can you hear me now? Yes, fine. I lost the connection in between. So we were discussing about problem number 9. So problem number 9, see this investment we were talking about. Investment is regarding the replacement of plant and machinery. That is why we should take it as trading asset. Whenever it is a trading asset, we should consider while calculating capital employed under agreed value of asset, we should consider this investment amount. Then one more thing, there is whatever the income derived from this investment is not treated as non-business income. That means you should not deduct this income from the last year profit or from the all the years profit. Like if you see the previous problem, how we used to do, if there is a non-business income, that is interest received on investment, we used to deduct from previous year's profit. But in this case, we should not do like that. Why? Because it is for internal purpose. Then raw material, they have said raw material 2,60,000 it appears. Then there is a work in progress. What do you mean by work in progress? Work in progress means it is one kind of semi-finished goods. Half of the work is done, half of the work is remaining. So we can say that work in progress, that is also comes finished goods. Yes, that is 90,000. That is also their book debt. Okay, that is it appears, book debt appears, current asset, cash at bank appears. Only these two information, last two information, that is discount on debenture and underwriting commission. These are fictitious in nature, so these information does not appear. So you should not consider these two information while calculating capital employed under agreed value of asset. All other information comes in the asset side except goodwill. Yes. Then if you see the liability side, there is redeemable preference shares of 100 each, 5 lakh they have said. Then equity shares of 10 each, that is 10 lakh. Then general reserve, and then there is a profit and loss account. So all the four informations are shareholders fund. So we should not consider under total liability. Then balance of profit and loss account for the previous year is given in the problem, but we want profit for this particular year, that is profit for the current year, that is given in the balance sheet directly, that is 5,50,000. So we should take this information as actual profit. So that is one more thing you need to do. Next, if you see, there is 13% debenture and secured loan, creditors and provisions for taxation. All four items you should consider while calculating capital employed. That is under total liability, you should enter all the four items: secured loan, debenture, creditor and provision for taxation. After seeing all the things in the balance sheet, we should move on to see the adjustment. That is present value of land and building is 6 lakh. If you see the land and building given in the question, that is 2 lakh. Now there is an appreciation in land and buildings. That is why we need to take agreed value, that is 6 lakh given in the adjustment. Then similarly plant and machinery, they have said 12 lakh. If you see the plant and machinery in the problem, 15 lakh. So there is a depreciation in plant. So we should take market value or agreed value, that is whatever given in the adjustment we should take. Market value of investment they say, that is 7,50,000. What is the original value? Original value is 8 lakh. Now investment value is 7,50,000. This was information we should consider. Then book debts. Book debts are bad to the extent of 10%. That means what? There is a provision for bad debt. Book debt, there is a 10% provision they have mentioned. If you see the book debt amount, that is 2 lakh. 2 lakh into 10% if you do, you will get the provisions. That is nothing but 20,000. Then in similar company, normal profit is 10% on average capital employed. This is nothing but expected rate of return or normal rate of return, that is 10% given. Value of the goodwill of the company is based on 3 years of purchase of a super profit. So years of purchase is given, that is 3 years. So we need to calculate the value of goodwill as per super profit method. So let us see the solution part now one by one. But before solving solution, there is one note, that is investment is to be taken as trading asset, as the purpose of investment is to replace plant and machinery. This one we have already discussed. So let us assume investment is for government bond. In that case, investment becomes non-trading asset. Why? Because it is external in nature. 5% bond, 6% bond, government bills, anything. These are external in nature. That is why investment is non-trading asset under that situation. Then the next thing you need to see in the books of Jute Limited, statement showing value of goodwill. So goodwill, you know, super profit into years of purchase. Years of purchase given in the problem as 3. So goodwill becomes super profit into 3. Super profit formula you all know, that is actual profit minus expected profit. So one by one we need to solve now. Actual profit first we need to calculate. Actual profit, that is nothing but profit for the previous year. But in this question only last year profit is given, that too in the balance sheet. If you see under profit and loss account, they have said 5,50,000. So same thing we need to take as actual profit, 5,50,000, and there is no adjustment, that is there is no deduction of non-business income. Why? Because investment is for replacement of plant and machinery. Yes. After knowing the actual profit, we need to calculate expected profit. Expected profit, you know, there is a expected rate of return is given, that is 10%. So first thing we need to determine is average capital employed. So 10% on average capital employed. Then you need to do 3 columns, particular and 2 amount column. First, market value of asset or agreed value of asset. Agreed value of asset one by one we need to write by seeing the question. Once again, we'll look at the question land and building given in the adjustment. 6 lakh, same thing you are going to write 6 lakh. Then plant and machinery 12 lakh, same thing you are going to write. Why? Because it is given in the adjustment. See this. Then market value of investment. Market value of investment. See this, investment not in bonds. That is 7,50,000 we have written directly from the adjustment. Then all other items, motor vehicle, raw material, work in progress, finished goods as it is. Why? Because there is no adjustment given. So we'll assume that book value itself is the market value. By seeing the question itself, we can write directly 20, 2 lakh 60, 65 and 90,000. Then what about book debt? Book debt, they said 10% is to be considered as bad. So book debt total we know that is given in the asset side 2 lakh. So on 2 lakh take 10%, 2 lakh into 10% you will get 20,000. Now we want final amount. How to get final amount? 2 lakh minus 20,000 bad. You will get the final amount of book debt as 1 lakh 80,000. Then there is a cash at bank that is as it is given in the asset side. So 6 lakh 96,000. So you need to add all these information. That is all the market value of asset. That is total agreed value of asset. All this information you need to add. You will get the total as 38 lakh 61,000. So this is our total agreed value of asset total. Yes. Then less total liabilities. Liabilities except shareholder fund, everything comes. Debentures, external, secured loan, long-term loan. Then creditor, external liability, provision for taxation. It is one kind of provision. So total liability means liabilities including external liabilities, provisions and contingency. So all these information is given in the liability side. Directly you need to write by seeing the question. 13% debenture has 10 lakh, secured loan 1 lakh, creditor 1 lakh 50,000, provision for taxation 5 lakh 50,000. So now total liabilities, total answer is, if you add all these four you will get as 18 lakh. But we want capital employed. Capital employed answer or net asset answer we want. How to get net asset answer? Asset minus liability. 38 lakh 61,000 minus 18 lakh, if you do, you will get 18 lakh 61,000. But net asset method, you know, there is deduction of preference share capital, redemption premium of preference shares and arrears of preference share dividend. In this question, there is no information about redemption premium, there is no information about arrears of dividend, but only one information we know. If we see the question once again, what is that information? Preference share capital is given in the question. That is 5,000, 14% redeemable preference shares of 100 each, that is 5 lakh. So it is very clear now, preference share capital is 5 lakh, so that is to be deducted. So minus preference share capital. Why? Because this is a net asset method. Preference share capital 5 lakh we need to deduct. Net asset method is nothing but capital employed. Yes. So 18 lakh 61,000 minus 5 lakh, you get capital employed at the end of the year as 13 lakh 61,000. Now from this we want average capital employed. So capital employed minus half of current year's profit. Current year's profit we know that is nothing but actual profit. Only one profit is given 5,50,000. So 5,50,000 into 50%, or you need to do 1 by 2. You will get 2,75,000, that is half of current year's profit. Average capital employed answer is 13,61,000 minus 2,75,000. If you do 10,86,000 is our average capital employed. Now, after finding average capital employed, next thing we need to do is expected profit. Expected profit is equal to average profit, average capital employed into expected rate of return. Average capital employed answer we got 10,86,000. Expected rate of return is given in the problem. That is nothing but normal rate of return. Normal rate of return is 10%. So expected profit is 1,08,600. Now we can easily calculate super profit. That is actual minus expected profit. Actual profit we know 5,50,000. Expected profit just now we got 1,08,600. Super profit is difference between those two answer. That is 4,41,400 is our super profit. Next, goodwill, super profit into years of purchase, that is 4,41,400 into 3. You will get final answer goodwill, that is 13,24,000. 200. This is our final answer. See, very simple problem except for the adjustment of investment. That is the one thing different in this problem. Then all other informations are similar. Yes. Any doubt regarding this problem number 9? You can ask now. Yes. Any doubt regarding this problem number 9? Yes, Akamsha, Amrita, Anusha, Disha, Kushal, Omkar, Pooja, Rajat, Shifali, Suresh, Swati. Yes, tell me. Kushal, do you have any doubt? Suresh, you can unmute yourself and ask if there is any doubt. If there is no answer, I'll assume that there is no doubt at all. Everything is crystal clear. Everything is perfect. Yes. So now let us see the problem number. Next problem we need to discuss. So let us see the next problem. See this problem number 10. Problem number 10. The following particulars of Neon Limited. So now this type of problem, if you see, this type of problem is for 6 mark. 6 mark problem. So profit earned for 3 year. 3 year profit is given. 2013-14, 2 lakh. 2014-15, 2 lakh 40,000. 2015-16, it is 2 lakh 20,000. Okay. Then normal rate of return. That is nothing but expected rate of return 10%. Capital employed is given directly. No need to calculate net asset method. Why? Because capital employed is directly given in this problem. So that is 12 lakh capital employed. Profit included non-recurring profits on the average basis of 3,000. That means what? Can you explain the meaning of this sentence? Fourth sentence. The profit included non-recurring profit on the average basis of 3,000. That means what? What is the treatment for non-recurring profit? Yes, anyone? What is the treatment for non-recurring profit? Should we include or exclude from the profits of the previous year? Can you tell me? Should we add to the profits of previous year or should we deduct from the profits of the previous year? If there is a non-recurring profit, that too on the average basis. Yes. See this, they have said average basis 3,000 means from every year. From every year you need to deduct this amount. 3,000 you need to deduct this amount. Why? Because not a recurring profit means, so these type of profit, one kind of non-business income. How we used to calculate non-business income? What is the treatment for non-business income? Same thing is applied for non-recurring profit also. So from the previous year profit, we need to deduct this amount. Compute the value of goodwill as per 5 years of purchase of super profits. Okay. So very simple. As per super profit method, we need to calculate. So in the books of Neon Limited, solution statement showing value of goodwill. So first one, goodwill is equal to super profit into years of purchase. Years of purchase is given in the problem as 5. See this, 5 years of purchase. So formula changes now. Super profit into 5 is equal to goodwill. Next, super profit is equal to actual profit minus expected profit. Now, first thing we need to calculate actual profit. Actual profit, there is an adjustment. If you see this 3 years, 2013-14, 2014-15 and 2015-16. Okay, so for all the 3 years, profit is mentioned in the problem, 2 lakh, 2 lakh 40 and 2 lakh 20. So from these profit, you need to deduct non-recurring profit that we have already discussed, 3,000. So deduct 3,000 from every year's profit. 2 lakh minus 3,000, that is 1 lakh 97,000. Similarly, 2 lakh 40,000 minus 3,000, 2 lakh 37,000. Then for the last year also, 2 lakh 20,000 minus 3,000. This is 2 lakh 17,000. So total is 6 lakh 51,000. So this is our actual profit, but we want average profit. Average profit, actual profit is equal to average profit, you know. That is why 6 lakh 51,000, number of years is 3. 3-year profit is given, that is why divided by 3. 6 lakh 51,000 divided by 3, if you do, you will get 2 lakh 17,000. This is our average profit. Yes, one part of the problem is over. Now next is expected profit. Expected profit here, if you see expected profit, you know there is a capital employed method we used to follow, but in this problem capital employed answer is directly given, that is 12 lakh. So expected profit is equal to total capital employed, directly given 12 lakh, but we want average capital employed. Average capital employed is equal to total capital employed minus half of current year's profit, that is why here deduction half of current year's profit. So current year profit means profit for the year 2015-16. So 2 lakh 17,000 is our current year profit. So we want half. So 2 lakh 17,000 divided by divided by 2, or else you can do 2 lakh 17,000 into 50%. Yes. So 2 lakh 17,000 divided by 2, you will get 1 lakh 8,500. So average capital employed is 10 lakh 91,500. Now we can easily calculate all other things. Expected profit, that is 10 lakh 91,500 ACE into ERR, expected rate of return. Expected rate of return, if you see, that is given as normal rate of return 10%. So take 10% on ACE, you will get expected profit as 1,09,150. Then you need to calculate super profit. Super profit is equal to actual minus expected, 2,17,000 minus 1,09,150. You will get super profit as 1,07,850. Finally, goodwill. Goodwill is equal to super profit, this answer, into years of purchase, that is 5. Final answer is 5,39,250 is our goodwill. Yes. So this type of problem comes for 6 mark. 6 mark problem. Yes. So any doubt regarding this 6 mark problem you can ask now. Yes.